Good afternoon. It is, what day is today? Monday, May 9th for the E-Minis. We'll trade the E-Mini S&P 500 right now, and as you can see, market's been trading up from the low of the day quite a bit. And I believe we've hit a spot right in here where the market, we should get some type of reaction to the downside. Market got hit this morning pretty hard, bounced right in here as expected. Okay. Actually, the live trading room just cleaned up today, over 11 points up in the, 10 points up in the live E-Mini room today. So we caught that low there, and right in here, again, I believe we're going to get some type of reaction. I'd say a minimum of 2054 right in here is what we're looking for. And let's just see what we're doing here. Okay, we've only got a small position on. We got 2 contracts. I'm going to pause this video, and I'll be back to you when things get a little bit more interesting. Actually, let's do this. Okay, this is what transpired this morning. Let me put, where did it open up today? Actually, right, 9:30 is where we opened up. We actually opened up right in here, rallied up, came down, tested those lows, and we're coming up now. So we'll see what happens. I will be back with you. All right, I am back, and the market did what we thought. Market came down to 54 and a quarter. I got out here at 54 and a quarter. I was able to get filled. It hit it probably 6 or 7 times between these 2 bars right in here. 54 and a quarter, 54 and a quarter. We're at 55 right now. So again, on just 2 lots, we made $150 in literally 14-ish minutes. So it was a small little trade there. And you may be wondering, well, why did I choose a 1.5 on that trade? Well, what I tend to look at is I look at the, let me just write this down so that helps you when you're trading, because you can't have unrealistic expectations when you're trading, especially day trading, right? So you need to know what the volatility is at the current time of your trade, right? So what I do is I look at an ATR, right, average true range, and I just go back 4 bars. So this yellow down in here line is an ATR of the last 4 bars. You see that right here? Average true range, right? 4 bars. So when I entered this trade, let's take a look at this. When I entered this trade, okay, look at what the ATR was. You see that? Right there in the window at the very bottom, ATR in caps, 1.25. So when I entered this trade, right, if you go back 4 bars, the volatility was a 1.25 points, right? 1.25 points. So, excuse me, what I typically do is I shoot for a minimum of what the ATR is at the time of putting on a trade. Okay, I don't adjust it as I'm in a trade, but when I get into it, when I get into a trade, I like to see what the ATR is. Actually, I actually got filled. The next bar actually went to 1.38. So we made a 1.5 on this trade. You may be saying to yourself, well, it was only a 1.25. Why didn't you look for a 1.25? I typically look for exactly what that ATR is when I enter the trade. But on this particular trade, I looked for just one tick more. But that's a good guide, right? You see how it's dropped? It's 0.94 now. And I typically don't even put on a trade if the ATR, right, of the last 4 bar ATR is under a point. So right now I won't be looking to do anything because volatility has really shrunk. We're below a point. As long as that ATR, the 4 bar ATR, is at least a point or greater, I'll look to take the trade. Obviously I prefer the bigger the ATR the better, because the more money you're looking to make. But as a rule of thumb, and this isn't, set in stone 100% across the board on every single trade that I take when day trading, but a good rule of thumb is looking at that ATR to know where you're at, because that's going to keep you in alignment with what's realistic. Okay, what's realistic? And again, if you're looking at an ATR of 75 cents, why would you be looking to make 2 or 3 points on a trade? You may be sitting there for quite a while until volatility starts to step back into the market. So you'll find yourself, when you're taking a trade, you'll find yourself, in a trade less than you probably would otherwise be looking for. I mean, I find that a lot A lot of traders tend to look to make a lot in terms of points, and it may not make sense based on the current environment in the market. So a good guide that I like to use is the 4-bar ATR. Okay, so again, when I put this trade on right here, when I shorted it, the ATR at that time was 1.25. So is it bad to maybe look for 1.50, just one tick over that average true range of the last 4 bars? No, not at all. Could you have been looking for 1 full point only on maybe half and then look to trail it on the other half? You certainly can. But so the point I'm trying to get across is a good guide is looking at that 4-bar ATR. At times I do look at the 10-bar or the 20-bar ATR, but for day trading, I do prefer that 4 to 6-bar ATR. Okay, so I hope that helps. And again, if you can, scalp out 1 to 1.5, 2 points a trade a few times during the day, you're doing extremely well. And again, this should help you a little bit. Okay, have a great day. Bye for now.